From FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I usually go through what happened globally around the world and try to forecast what we may see this coming weeks. And I show investors and traders what is happening in the market, what you should be aware of. I show you what is hot, what is not, what you should hold and what you should fold. And by the way, so if you enjoy the presentation, we would really appreciate to have some feedback. And by the way, while the market is going down and being thrashed, there are still some stocks that are really going up, and there are many ways you can still make money when the market goes down. Well, over the weekend we see what happened to the Dow Jones. That's the US stock that highlight what's happening with the top 30 US stocks. Was down 4.6%. 913 points to 19,174. The S&P 500, that's the broader index, top 500, was down 4.3%. The Nasdaq Technology Index was down 3.8%. And in Europe, the Stoxx 50 Index, which comprises most major European markets, was up 3.9%. In London, the FTSE 100 Index was up 0.8%, and in Germany the DAX was up 3.7%. In Japan, the Nikkei index on Friday was down 1%, and in China the Shanghai index was up 1.8%. On our market on Friday, we were actually up 33 points or 0.7%. Actually, earlier in the day we were much higher. Okay, and in terms of the currencies, you can see here that the Australian dollar versus the US was giving you 57.8 US cents, 54.1 euro pence, and 49.8 British pence. We look at the big picture. What you can see in those two columns, the changes over one full week, and then we tell you what happened over the last 2 weeks combined. So for instance here, the Dow last week was down 17.3%, 4,011 points. However, if you put the 2 weeks together, they were actually down nearly 26%. So that means over the 2 weeks ago, the market was down 9% plus the 17% over last week, giving you 26%. The Nasdaq Technology Index over 2 weeks was down nearly 20%, and the broader S&P 500 Index was down 22.5%. The dollar was stronger, nearly up 7.4% higher, and the Australian dollar versus the US was down nearly 12.6%. Okay, now in terms of commodities, gold was down 28 US dollars per ounce last week. However, have a look at this. Over the last 2 weeks, gold was down $173. Huge. So that means it was up above $1,600, as you can see here. So 10.4% drop in the price of gold over the last 2 weeks. Look at silver. Silver was down 14% last week and 27% down over the last 2 weeks. Crude oil, that's the West Texas crude oil, down 28% last week, down 43% over the last 2 weeks. And soybeans was up 1.9% last week. However, over the last 2 weeks was down 3%. And President Trump this morning on the TV was saying that China is buying soybeans from America. However, maybe they started to buy a little bit of soybeans, but the price overall is down quite a bit, nearly 3% over 2 weeks. Now have a look at the Australian market. We can see here that at the closing bell, our market was down 13.05%, 723 points, and closed at 4,816, as you can see here. Over the last 2 weeks, the ASX was down 22.5%, 1,400 points. So it's very important to put the 2 weeks together to see the big picture. And by the way, our market is made up to a great extent by two main sectors, the financial and the materials. The financial sectors, that's the banks, mainly the banks, down 24.5% over 2 weeks, and the materials, which affects BHP, Rio and Fortescue, was down 17%. Looking at the stocks, BHP was up 1.1% last week, and so is Rio, 1.1%, and Woolworths was up 1.1% as well. However, when you look at over the last 2 weeks combined, going down this column, the worst one is Santos, down 54.5%. Half the price of Santos was thrashed. Following that is Worley, 51%. Going up 39%, Woodside Petroleum, 28% ANZ Bank, Macquarie Bank 35% down, NAB 28% down, and so on. So it's very important to know, which if you don't know it already, that the market is actually really hammered down. However, if you look at those companies that actually did reasonably well, you may see that maybe they've reached the bottom. BHP at $27, when it got up to nearly $49, maybe it's starting to turn around, and maybe so is Rio. Okay, now in terms of volume, this is actually the volume over the last 15 days. You can see that the market was down quite a bit in volume. No one was interested to buy or sell. Then the market picked up some steam, and then still. And by the way, on an average, the volume usually is around the 2 billion. But look, here we can see that the volume has been going up and up and up and up. Nearly 4 billion transactions. So it's a very volatile, a lot of buyers, a lot of sellers. Sellers are afraid and buyers are hungry for more money. On Friday, 37% of all stocks rose and 24% declined. And you look at advances over declines over the last, that's week by week. You can see for the last weeks, obviously the declines exceeded advances. But however, you can see that the last 2 weeks there has been a little bit of a slight advantage or slight improvement in the advances. Less declines and greater advances. So maybe the market is starting to think that it's time to get back into the market. Now we have that mechanical system that helps us to look at the indicators, and from the indicators we can see here, actually for the American market, that obviously all the indices are bearish. Commodities, gold and silver. And by the way, we've got 4 different strategies, one for the investor, one for the conservative trader, one for the aggressive trader, and one for the very aggressive trader. Different people have got different risk appetite, and that's the reason why. However, you can look at the last 3 weeks and you can see it's very bearish, and even more and more bearish the last 2 weeks. Crude oil, extremely bearish. Natural gas, heating oil, bearish. Wheat starting to turn around, as you can see here. For the very aggressive trader, wheat has started to turn bullish, and so is coffee and orange juice. The American dollar very strongly bullish, the Australian dollar very bearish. That's the weekly and that's the daily. And of course, when we see the weekly and the daily giving you the same type of indicators, in other words 5 out of 8 indicators telling you sell or buy or sideways neutral, then this is actually an encouragement. Remember, the weekly changes once a week, the daily changes every day. So maybe on Monday you have certain signals. By Wednesday, the weekly did not change because the week is not over. However, on Wednesday, the daily could change. And unless you have a confirmation from the weekly and the daily saying the same type of indicators, either buy or sell, then you are neutral, you're out of the market. And that's our mechanical system that we have designed. Now that is actually the chart for the Dow Jones. Friday the market was up However, you can see that week on week it's been coming down for nearly almost 30,000, not exactly but very close to 30,000, down to nearly 21,000 during the week, and recovered a bit. But you can see here there are more red candles than green. Volatile is the name of the game right now, and if you are trading the market on a volatile business, then of course you go bearish when you think it's going down, and you go long when you think the market is going up, and you make money either way. Now this is actually our market, the weekly and the daily for the sectors, all red. Nothing is, except the consumer staples turn neutral based on the fact that people are going to Woolworths buying more than usual, and the shelves get emptied quickly and replenished very quickly. So you can see here the weekly for the consumer staples. So maybe you want to think about Woolworths, West Farmers maybe, and you can see here day by day it's been continuing to be neutral. It doesn't tell you bullish, but at least it's not bearish. And we offer that for you, and we put it on our market report. We put it onto our website, so you can go to the website and see that slide performance again. Okay, in terms of our shares, the only share that you can see here that has turned, again, Woolworths, as I mentioned, that's the weekly, turned bearish, and so is RIA and TPM. However, the week before was bullish for the investor, and it turned to be bearish for the very aggressive trader. So I mean, you got to be careful what you're doing. And again, as I mentioned before, the weekly and the daily have to be in coherence. In other words, they agree with each other. You get the signal from the weekly to the daily, and then the daily has to have also the same type of indicators, 5 out of 8, before you can confirm the trade. If you want to learn about it, we run courses to match your need and wants, and we can help you out to trade on your own if you want to. This is actually our ASX 200 chart. As you can see, 1, 2, 3, 4 weeks down all the way from 7,200 to 4,816 on Friday. As a matter of interest, the market is down to 4,500 today. As you can see here, again, volatility is the key factor of the market. The most active trades, as you can see here, CIMIC, that's the Old Leighton Holdings, last week was up 51%. Afterpay was up 26%. So you can see here, even though the market is being thrashed across the board, there are still some companies you need to look at and wonder if you should really do more investigation to see whether it's worthwhile trading. Okay, now I'm going to go to volume. We have a mechanical system that actually looks at all the markets and determine the top 50, which ones have shown volume above the average volume. Here, for instance, if we look at the average volume, it's actually 50 weeks. We work out the average volume over 50 weeks, and if last week volume exceeds that average, it pops up here. Well, nothing appeared for the top 50 from last week, and nothing for the mid cap. However, on the bearish side, you can see companies such as Karoon. Karoon used to be the darling company some years ago, down 51%. And the volume, look, that's nearly 10 times the volume, from 8 million shares to 104 million shares last week. Hammered badly. You can go down the list and you may find one company that you're familiar with, and then again you may want to talk to us about which one you should really trade in this volatile market. Now I'll show you the daily. That's on what happened on Friday. On the downside for the top 50, Aristocrat, because of course all the clubs are closing down, the market was down, the price was down 2.6%, and the volume was nearly 4 times their average volume. Sonic Healthcare, Orica, Wesfarmers, Commonwealth Bank, all these companies offered a decline in the price and excess volume. On the mid cap, you've got MyState, McMahon Holdings, and so on. Again, this will be on our website. You need to know what dividends are coming up shortly. If you have any of those companies, Cochlear for instance, they're going to give you $1.60. That is actually nearly 2% yield. Cedar Woods Properties, today it's giving you the ex-date, giving you 12.5 cents, and that apparently is about 5.8% yield. And you've got different yields across all the board. Now this one here, for instance, I've actually sorted the stocks that are paying dividends this week by percentage. If you're trading, if you've got a company called Adair, which is 7 cents, it's going to pay you 1.5 cents. That's nearly 23%. We don't like any company below 10 cents, by the way, so we're going down the line, and the only one is Harvey Norman. Harvey Norman at the moment, the last price, Harvey Norman, is $2.77, and is offering you 33 cents. That's nearly 12%. So if you have Harvey Norman, it's giving you very nice dividends. Okay, and you go down the list furthermore. Okay, and that is all actually from us. Our disclaimer, obviously, everything we said today is of general advice only. There is risk in the market. You need to be aware of the risk and reward, and before you take any action, please consult with us or with your professional advisor. And if you have any questions, all you have to do is ask. And to communicate with me, you can send me an email at george@fssecurities.com.au. You can visit our website, fssecurities.com. You can ring me on my mobile, and if you ring from overseas, 61 for the Australian country code is 61. You don't need the 0. From overseas is 61 411 259526. Ring him locally on my mobile 0411 259526. I'm available. I can speak to you 7 days a week, almost 13 hours a day. Finally, have a good day, good week, and happy trading.